Welcome to the Note Investor Podcast. We'll guide you through the ups and downs of note investing and teach you all about the nitty-gritty details of the business that other people won't talk about. Your host, Dan Deppen, is a former aerospace engineer and product manager who transitioned away from cubicle life to full-time note investing in 2018. Our website is www.fusionnotes.com, where you can subscribe to this podcast, comment, and find links to other information on note investing.
Hey everyone, my name is Dan Deppen and welcome to the Note Investor Podcast. And in today's episode, I'm going to talk about the 5 phases of becoming a note investor. So, note investing journey, it can be quite long, right? And the goal for most people is to go from just being introduced to the space to actually being someone who's active. And what I've observed is that different note investors take a variety of paths to get there, and they take wildly different amounts of time. I went probably faster than most. A lot of people, and maybe it's the majority, they tend to go in circles for a long time, maybe even years, and don't actually ever get there, right? And then of the people who get to the point where they're buying notes, they're active, there's an even smaller subset that get to the point where they've got a real, what I would call like a real functioning business, right? Where they're not just buying 1 or 2 notes. So today I'm going to talk about some of those phases that people go through and how to get there. So I'll call phase 1 is where you're just learning the foundations or learning the fundamentals. And one of the first big steps to this, it doesn't even really involve notes, is just getting your head right and getting your mind right and having the right outlook and the right set of expectations. So investing really, to me, is almost more of a mental game than a game of knowing specific knowledge and having the right set of processes. So I think it's like sports in a little way. Like, so for me, if you know me, I play a ton of golf. And if you look at especially like the higher levels of golf, what really differentiates players is not even so much the physical skills. Like if you look at the PGA Tour or something, all those guys have amazing physical skills, amazing swings, great fundamentals, but a lot of what differentiates them are their mental skills and how they handle different things. And with note investing, I mean, I've talked about this before, but it's definitely got its share of ups and downs, and being able to handle those and knowing what to expect, I think, is really key to success. And of course, along with those foundations, right, goes just learning the basics of notes. So just understanding what note investing is, what a note investor does, what kind of vendors you're going to need, right? So you're going to need loan servicers and attorneys and other kinds of folks. And then just understanding those kind of essential basics of what a note is, how the documentation works, the difference between a mortgage and a contract for deed, performing notes versus non-performing notes, and all of those different things. It's also getting an understanding of some of the basic exit strategies and how to put together your plan as a note investor and understanding what entities you need to get set up. So, most people are probably investing out of a self-directed IRA, or whether you're direct investing out of an LLC or something else that's after tax. The other thing, too, that I lump into the foundation, some people actually never do this, but I would also include in this foundational phase 1, learning how to market yourself. And one place this comes up big in notes is marketing to sellers. So a lot of note investors, particularly new ones, tend to be extremely flaky. Sometimes they're just kind of dabbling. They're not going to actually do anything. And as a result, your note sellers tend to be very skittish when they deal with folks that are new. When I first started investing in notes, and I was dealing with sellers and they were standoffish, I got really offended because I'm like, in any other facet of life, if I have money and I want to buy something and somebody's selling that thing, we're going to have a conversation, right? It's not that hard. But when I got to the point, when I got to kind of the cycle of being a note investor where I was starting to exit deals and sell some of my own notes and started running into some of these characters who would waste a lot of time and not close, that's where the light bulb went off. And I was like, oh, I get it. That's why sellers can be very standoffish. And so that's where marketing comes in. And what I mean by this is marketing yourself to sellers, in that you want to make sure you put out a professional presence, so that if you approach a seller and maybe they have some assets they're looking to get rid of and they go and look you up or look up your business, what you're presenting to them is like, oh, you're a legit person that they should work with. And of course, there's the whole other aspect of marketing, which, you know, kind of comes later in the cycle of, if you're going to take outside money, you might be marketing to investors. But actually, to start off, marketing to sellers is one of the biggest and most important things. And, you know, some people might consider this more advanced. I consider it kind of foundational. So once you got those foundations set up, now it's actually time to go out and start buying notes. And, you know, I'm talking about 5 phases overall. Some people think of buying notes as the end point. To me, this is actually early on. I have this in my phase 2. So as part of this phase is being able to source notes. Can you find notes for sale? And some of this is getting access to, you know, sort of the easy to access sources, like, you know, things like PaperStack, you know, some of the bigger brokers, and then also learning how to cultivate more what I would call off the grid sources. So it could be funds that aren't as well known, or really, to me, off the grid kind of means building a big network of people within the industry, so that when they have something to sell, they'll give you a call if you're known as a reliable buyer. It's also, you know, putting together your business model and knowing what you're looking for. So if you're new to this, as you get into it, you'll have people send you all sorts of different assets. So for me personally, I focus on single family residences, but, you know, I've had people send me notes on commercial properties, vacant land, mobile homes, all sorts of other things that I'm not looking for. But then also within notes for single family residences, right, there's only a subset that I'm actually going to buy. So I have my set of states that I look for. I have certain parameters in terms of the type of property, the loan terms, the value, the balances. So somebody sends me a tape of notes in, I don't know, I just got one actually the other day in Illinois, right? I don't buy in Illinois. It requires a license. I don't have the license there. So I'm not even going to look at that. So part of putting together a business model is understanding what we're looking for. And this is going to tell us how to filter things as we get them. And then the other part of the buying process is being able to do your pricing and calculate and do your ROI analysis. So this is another really foundational thing that a lot of people struggle with. And I am, it's interesting. Lately I've had a few conversations with folks around pricing and calculating returns. And this is something people really get wrong in a big way. So understanding how to do your pricing, whether you're talking about performing notes or non-performing notes, is really, really key. The good news is when people do make errors, they tend to make it on the side of being, they make a fundamental error, but it tends to make them more conservative, which is okay in one standpoint, because that causes them to walk away from deals as opposed to maybe buying a bad deal. And then you also need to be able to do your pricing. You be able to get through the bidding process and negotiating process with the sellers. You know, these are often involve, you know, you make an offer, they make a counter, sometimes you make a recounter. There can be a lot of back and forth. And then the big part that, you know, if you listen to my podcast or follow my other stuff, you've heard me talk about a lot is the due diligence phase, which is really critical because there's so many bad notes out there, or notes with problems. And then, you know, you need to learn how to actually close these deals, right? Closing a note deal is kind of different than closing a traditional real estate transaction. You're generally not going to a title company and getting a settlement statement and all of those other things. Closing a note deal can be, it's a little bit, these are private transactions. It's a little bit like the Wild West, unless you're doing it through PaperStack, where they have a nice process that I really like. So once you understand that and get to phase 3, which is, I call adding value to your assets. Now, if you are buying performing notes, hopefully you buy them and they just keep performing. There might not be a lot of value to add, but you can also work that portfolio efficiently. So this comes down to what you do as a note investor on a day-to-day basis, what some of your processes are, what you're keeping an eye on a regular interval. And, the other question is, how do you actually make money in notes? So it could just be buy and hold of a performing note, but even then you need to keep tabs on those. There's some things you can do to keep those on track. And then also, if you're an investor in non-performing notes, there's a big difference between someone who can work that portfolio efficiently and someone who just kind of doesn't and tries to depend on the loan servicer to do everything, which can be a pretty dark road. And then one of the big pieces of magic is being able to turn a non-performer into a performer, making a non-performer profitable. That's one thing that people new to the business often ask is like, well, wait a second. If I buy this loan that the borrower is not making payments on, how on earth do I make money on that? And of course, there are a lot of ways you can do that. But knowing how to do that efficiently is really where a lot of your profit comes from as a note investor. That's what can differentiate you from the pack. And so one of the big areas this comes up in is when you get REO properties. I've talked about this a lot too, but when I have a note that turns into an REO, whether that's through foreclosure or say we did a cash for keys, that's where things get really interesting. And I've noticed that my returns are wildly variable, right? Because one of the big challenges in note investing is you can't see the inside before you buy the note. And that's always a big X factor. Sometimes when I get an REO, the process is actually really clean. The property is in good shape. I happen to have a good realtor in the area. They just kind of get it sold for me and I make a lot of money and it's awesome. And then I get other ones that go totally sideways, right? And those do not have good returns and actually can suck up a lot of time. But knowing what to do when you get these is really, really key. In fact, I have one I'm dealing with right now that I'll have to do a podcast on at some point in the future when I get this wrapped up. But it's just been a complete nightmare from top to bottom. We did a cash for keys. My attorney missed something and I have a title issue I was trying to clear, and then the property was vacant while I was waiting to get the title cleared so that I could sell it. And then someone broke in and stripped all the copper and wire, which I didn't even realize was that big of a thing right now. But apparently, from what I've looked at online, some of the commodity prices have increased. So apparently people are doing that again. So that's something to keep in mind. And then I had someone dump a bunch of trash in the yard, which that's one thing I'm still trying to figure out exactly how and why that happened. So REOs can get very weird. And then the other part of what I would call phase 3, right? Part of your, adding value or adding profit is, when it comes time to sell your assets. So if you had a non-performer that you turned into a performer, now you're going to be on the selling side of the note business. And that has its own nuances in terms of how you price them now when you sell, where you go to sell them, how you market and position the asset and get it ready for sale. It's something that not a lot of people talk about, right? But if you're going to become active in the business, you're not just going to be buying, but you're going to be doing a lot of selling at different points as well, especially if you're taking on investor money and your investors want an exit at some point or another. And then we get to phase 4, which is what I call building for scale, or now you're ready to scale up your business, right? So when you get to phase 4, you've understood the basics. You can source notes, you can buy notes, you can be, what I call an efficient operator. You know what to do with your portfolio. You can exit notes, And phase 4 is the point where we want to scale and now kind of turn up the volume on our business. So some note investors get into the business and they just want to buy one or two notes for their portfolio, and that's great. There's nothing wrong with that. But the cool thing about notes that I always felt was once you get a process down in place, it can be a very rinse and repeat business. So once you get all the systems in place and you know how to handle different things, there's not a lot stopping you from just turning up a dial and scaling, especially if you can get outside funding to keep growing. So, I mean, there are a lot of different things we're going to do when we're scaling. Part of it is understanding how to use a CRM or customer relationship manager. I use Pipedrive for this. Some people use Podio. There are a lot of different tools out there. I don't think which tool you'll use matters very much, but this is your database where you're going to keep track of all of your note deals. You're going to keep your list of things to do. You're going to set reminders. You're going to take notes and keep data on all of your deals. And that's really the system you use to keep everything organized. Because I think you'll find that if you've got a couple notes, you can probably just sort of keep everything in your head or just set little calendar reminders or remember to do different things. But you scale that up, you start getting beyond 10 notes and, God forbid, 20, 30, 50. Forget trying to keep stuff in your head. It's not going to work. You've got to have some sort of database where you're keeping track of everything, and that's your CRM. The other thing you'll do at some point, which I've done, is hire outside help. Bring on an assistant. Man, that is really the key to scaling overall. So like what I've done is I've built a set of standard operating procedures, and then I have Wendy, who is awesome, who helps run a lot of the day-to-day things. Now I've still got my hands in that as well. I don't really, some people have the idea, it's like, oh, this is great. I'll hire somebody in the Philippines for $4 an hour and they'll do all my work for me and I'll make tons of profit. I don't think it's quite that straightforward. I like to have, kind of better, more sophisticated help who can deal with things as they come up, but it's really going to be essential to scale. Because if you're doing everything yourself, you're going to be limited in what you can do. And then they're also going to help, keep track of your portfolio. I have processes around when a payment gets missed that I was expecting. I do a lot of early intervention. I send letters. I sick the servicer on them. And that really helps things from drifting off track. Like if you have a borrower and they miss a payment and they don't hear anything, sometimes they kind of go, maybe this isn't such a big deal. But if they know that like you're watching and you're going to react as soon as something gets weird, then they have more of a tendency to stay on track. The other thing you got to keep track of too, right? Especially as you get to like 50 plus notes, you might have several different forbearance agreements in place. And then once a borrower has completed them, you need to process a loan mod. So I've got systems for keeping track of those. I had, what wasn't a big deal, but back as maybe a year ago or so, I had a borrower, had them on a trial payment plan, and the deal was they would complete this trial payment plan and then I would modify the loan. Well, they completed the trial payment plan, kept making trial payments. I didn't notice, and I forgot to mod the loan, and I didn't mod the loan until a couple months late. Didn't really cause an issue, but that sort of thing is bad, and that's where I put in some additional processes in place to make sure that kind of thing didn't happen again. And then having standard operating procedures around all these things, I think, are really key, and they're really what allows you to scale up your business. And then we finally get to phase 5, which I call funding your growth. And so this is the point where now, you're an active note investor, you can scale, you could operate really well and really efficiently, and you're ready to take on outside funding. This is a whole subject in and of itself, and I think down the road I should probably do some podcasts and some other videos for the YouTube channel specifically on this, because I have a lot of thoughts on this that I'm not necessarily going to go into today. But when you're taking outside funding, you need to be able to find the outside funders who are looking for deals and I gave you kind of a spoiler alert. This still surprises me, but it's probably one of the easiest aspects of my business. Especially these days, there are a lot of folks with cash, a lot of folks who are interested in deploying it in notes, but don't have the bandwidth to set it up themselves, right? I mean, they've got jobs, they've got other investments they're keeping track of. So generally, it's not too big a struggle bus to go out and find funding. But finding funding is not the only thing you need to do. You also need to screen that funding. I have heard some horror stories of people who have, taken on joint venture partners who, turned out just to be very challenging to work with. Now, knock on wood, I haven't really had those issues, which is good, right? But when you're finding somebody to be a funding partner, you're not just looking for them to show up with money. Like I said, a lot of people can show up with money. That's not that hard to find. But you want people who have experience as investors, understand that there are going to be ups and downs, so that as soon as you have a hiccup or some kind of issue, and I have a lot of issues on note investments where, let's say, I don't know, the county code inspector starts harassing me or something else happens, and then they just kind of go away. So if you have a partner who's going to, freak out at the first sign of trouble, this isn't going to be the business for them. So you kind of want to identify that up front. And more importantly, though, you want to make sure you as an operator not just know how to operate a notes business, but also know how to be a good partner. So this involves understanding how to communicate, understanding how to do reporting to your partners and investors, and being able to communicate bad news if something goes wrong, right? It's easier said than done. I've had some difficult conversations before in the past. If you're going to take outside funding, that's part of the deal. And if you're going to do it, you better damn well be prepared to do that. So finding and screening funding is a big part of phase 5. And then also just you have to understand the mechanics of setting up joint ventures, doing partials, doing loan hypothecations, which is one of my favorite things to do lately on performing notes. So those are the 5 phases of note investing. And if you want to learn more about this, I suggest you check out my Note Launchpad training course. So you can go to notelaunchpad.com and get more information about that. And the way I laid out the course, I actually laid it out in these 5 phases so that if someone wants to take the course, maybe they're already through a couple of the phases and they just want some of the other phases, they can do that. There's going to be a webinar on March 24th that I suggest you check out. I'll put some links to that in the show notes, where I'll go more in depth actually on what the training course is. So, definitely check that out. And if you're interested in it, I'm only going to have it open for a short window, maybe only 5 days, 5 or 7 days or so. I've got a bunch of folks going through the beta version of it right now. I've made some updates and changes. We're going to do this short launch, and then I'll probably open it up at some point again later in the year. But whether you can, you have time to go through it now or not, I recommend checking it out while the window's open. I'm trying to keep that contained because when people come in the course, I want to be able to give them attention and answer questions and, really be able to focus on it while that's open. So definitely check out that webinar. If you got any other questions, anything, leave a comment if you're watching this on YouTube, or, drop me an email at dan@fusionnotes.com. So hopefully that helps you get started in understanding those 5 phases. That's the framework that I use to kind of think about my overall journey as a note investor. So until next time, thanks.